Hello traders, the title of the video is 5 truths about the Elliott wave correction. Alright, so it's quite challenging to trade the Elliott wave corrections. Now you need to understand what I'm talking about here. We are talking about the corrective phase. So we have a trending phase when a financial instrument has been very bullish. So trader may be wondering, Joe, you always show bullish stocks. Why are you not showing bearish stock? One of the reasons is because it helps me to sleep better, and a trader do not hate me, or directors do not get upset when I'm talking about their stock being bullish. Alright? So I'm talking about a corrective phase. So we have a trending phase followed by a correction. Alright, so the 5 truths one should know about the Elliott wave corrective phase. So for traders that are new to us, the Elliott wave cycle is formed of the motive wave, which is subdivided into first wave, second wave, third wave, fourth wave, and the fifth wave. That's the motive wave. The motive wave is also what we call the trending phase of the Elliott wave cycle. But then after the trending phase, we have the correction. It's what I like to call the harvest season. Stock goes up, don't forget, it will come down at one point during the harvest time or during the corrective phase. It's nothing wrong with that. Though a lot of investors hate bearish market, the market will become healthier after a bearish season. All right, okay. So 5 truths one should know about the Elliott wave corrective phase. Okay. The first thing that we want to understand, we want to know about the Elliott wave corrective phase is that there are 3 typical, all right, Elliott wave correction that often occur during the corrective phase. The first one is the flat correction. The second one is the zigzag pattern, and the third one is the sharp correction. Those are the 3 types of correction that we often see during the corrective phase: flat correction, zigzag pattern, and sharp correction. Apart from those 3 popular corrective patterns, you may see a combination of those 3 flat correction. So you may even see, okay, a zigzag pattern followed by a triangle, then another zigzag pattern, okay, and so on. So this is what I mean by there are 4 types of correction. All right, the flat, the zigzag, the triangle, and the combinations. Those are the 4 types of correction that we can see during the corrective phase. But the most, talking about the 5 truths about the Elliott wave correction, there are 3 popular corrective waves that often occur during the corrective phase, and they are the flat correction, zigzag pattern, and sharp correction. That's the first truth. So talking about it, I want to dwell on this a little bit more. The flat correction, you want to understand the structure is 1, 2, 3. 1, 2, 3, double retracement, followed by 1, 2, 3, 4, 5. So some trader may say, John, what we have here is a flat correction, but we can't see the internal way. 1 move down, 1 move up, double retracement, followed by 1, 2, 3, 4, 5. An expanded flat correction, a bit funny one here. Some trader may say this is a flat correction. So zigzag pattern will be 1, 2, 3, 4, 5, 1, 2, 3. So you will see like this. Let me do a bit of drawing for you guys. Alright, so you like my drawing? Alright, here it is, my friend. You like it so much. So I'm talking first about the flat correction. So the first part of the flat correction will be 1, 2, 3, wave down. There are various types of flat correction: the running flat correction, the expanded flat correction, and the classic flat correction. So you may go around on YouTube or at 24 Elliott with YouTube channel, checking the videos about the flat correction. So the flat correction may have equal half, forming a kind of a double top. The expanded flat correction may go up to the 138.2% Fibonacci extension of the fifth wave before coming down 1, 2, 3, 4, 5. Okay, I like the expanded flat correction. You see it very often on the 4-hour time frame for day trading purposes. So I hope my drawing is correct. If not, I just laugh a bit and say, George, I need to teach you how to draw things, George. Because some people can draw very well. I wish I can draw so very nicely. So 1, 2, 3, 1, 2, 3, either equal high or lower high or higher high, and then coming down 1, 2, 3, 4, 5. This is one of the popular, corrective phase. So trending phase followed by a flat correction. The next one that we see very often, most stock you'll see that, they love the zigzag pattern. Some stock, so we need to understand the characteristic of some stock. Some stock will always exhibit a zigzag pattern. Some stock will always exhibit a flat correction. Some stock, most of the time, will exhibit a sharp correction. So you want to look a little bit into the past, to see what those stocks were doing in the past. That will help you also. The past help us to forecast the future. All right. So the second popular flat corrective phase can be a zigzag pattern. 1, 2, 3, 4, 5, and then 1, 2, 3, and 1, 2, 3, 4, 5. That is zigzag 1, 2, 3. Alright? So the first one will be subdivided in 1, 2, 3, 4, 5, or sometimes can be just a sharp correction followed by what we call a dead cat bounce, and then another 1, 2, 3, 4, 5 down. Bringing the price to 78.6% Fibonacci retracement level. And sometimes you see the sharp correction bringing the price to 50% between the zone of 50%, 61.8% Fibonacci retracement zone. Then people bought it thinking that there will be a trend, but it's a dead cat bounce because the A part of the zigzag pattern is a sharp correction, alerting that we are likely to see a dead cat bounce. You don't want to get into that trap, alright? Because you are 2-4 Elliott wave trader, alright? So you see 1, 2, 3. And then another 1, 2, 3, 4, 5 down, bringing it down to the 78.6% or even 88.6%, or all the way to the cycle point, which is the beginning of the prior trend. The third popular corrective wave is what? The sharp correction itself. So we talk about the flat correction, the zigzag pattern, and the sharp correction. Price coming down, shoop to shoop, vertical price move in a vertical channel. It's a distortion to a certain degree. You will see it very often if you have the fifth wave, which is ending diagonal. So if you don't know what is ending diagonal, alright, you need to go to www.24Elliott wave, click on fifth wave extension and the ending diagonal, alright. So giving us a warning when the fifth Elliott wave is confined in a triangle. Either we may have a zigzag pattern, and the A part, the A for alpha, the A part of that zigzag pattern may be a sharp correction, boom, 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 down to the 50% Fibonacci retracement level, creating a little bit of dead cat bounce, followed by 1, 2, 3, 4, 5 down. Or it may be a sharp correction very fast, which means the market has been bullish, people are buying that stock. The smart money say this stock is overbought, but ordinary traders, grandmothers, grandchildren, or everybody say, no, it's not finished yet. They keep pushing it, creating what we call distortion in relation to the time, not to the price. That's a very dangerous distortion. I talked about it before, and some market participants hate me for talking about that, but I am just talking about educational videos when I talk about things on YouTube, alright? So distortion in relation to the time is very, very dangerous. People pushing it, stock is overbought, no one wants to listen. It's like everybody's drunk, in fact. Bullish trader become very drunk, pushing. And then finally, why do we have the sharp correction? It's because everybody is coming out at the same time. So it creates a sharp correction. Pew, down. So those are the three types of correction that often take place. So this is the first truth about the Elliott wave correction. Popular correction are flat, zigzag, and sharp corrections. The second truth about the Elliott wave corrective phase or Elliott wave correction after a trending phase is that one should never, did I say that? I don't use the word never, but in this case, you can use that. One should never assume that the correction is finished until it is finished. I think it's self-explanatory, so you have to understand. Traders or investors sometimes will enter a trade prematurely. Alright? So because they think that the correction is finished, as I demonstrated that last time in a video that I titled, I'm looking here in my book, my exercise book for 2-4 Elliott wave. There's a video that I recorded last time. The title of that video was 1 Elliott wave trading mistake to avoid. Check it out, 1 Elliott wave trading mistake to avoid. Okay, so do not assume that the corrective phase is finished until it's finished. A flat correction may start as I show you in that video that I mentioned already. People think that the correction is finished, but then as people see the flat correction, and then the price goes up, forming, okay, the B part of the zigzag pattern. So you see here 1 2 3 1 2 3 1 2 3 4 5. You see it's a sharp correction. Fundamentals are solid. Everything looks good. Market's turning from bearish to bullish. Okay, it's all right. Use a top-down trading method to control the risk. Start going out 1 2 3. You say, oh, this is the first wave, this is the second wave. But you didn't know that it's a zigzag pattern that is not finished yet. But as the price was here, you thought that this is the second wave, and you buy it here thinking that you are catching the third Elliott wave, but it's not. The correction is not finished yet. Never assume that the correction is finished until the dust has settled. Alright? So which means when you are trading the corrective phase or you want to catch a new cycle, be very, very defensive. That's all. So then the price come down again, 1 2 3 4 5 down, completing the flat correction. So the first part of the flat correction is a flat correction. You think that the correction is finished. Now you say 1 2, you think that you are catching the third Elliott wave, but in fact it's the B part of the bigger zigzag pattern. And now you hit 1 2 3 4 5 down. You see, wonder what's going on. So second truth about the corrective phase: be very defensive. If you assume that a correction is finished, you are trying to catch a new cycle. Never assume that the correction is finished until it's finished. Use a top-down trading method, be very defensive, and control the risk. Okay. The third truth about the Elliott wave correction or Elliott wave corrective phase after a trending phase, all right, is that always watch. Did I say always? Yes, always watch the central bank's policy. All right. The central bank's policy usually will blow the whistle. Did I say blow the whistle? All right, something like that. All right, to the market that a new cycle is likely to begin. So we have seen it in 2009. I want to bring on very quickly the S&P 500. In 2009, the Federal Reserve was very, very clever. I don't like that. They were too smart. They controlled the market carefully in 2009. So what they were doing in 2009, here we were. I have too many lines, by the way. Alright, so I'm going to color this one. Which color? Use red. You see, pay attention to the vertical line. Okay, that's 2009. The red vertical line, okay? We're here. So they start saying to the market, they say, what they were doing before, they were devaluing the dollar. So, whoa, in that case, there are so much liquidity available so people can borrow money at a low interest rate in the United States. So, people were pumping those excess of cash into the financial markets. All right. But before that, that was okay. So in fact, the market was going down, all right, from 2007 to 2009, all right, and the Federal Reserve, okay, was devaluing the dollar. So financial crisis was in place. People wondered what's going on. Federal Reserve say, all right, you see here when we were in the beginning of 2009, they say we're going to start, okay, printing the dollar because most of the time when the market is going down, people don't like it. I wonder why. Am I the only one that understood that price going down is healthy for the market? That people may buy a stock that is very expensive at a low price. Am I the only one that understands that? Maybe. But usually when the market is going down, people cry and start complaining and blaming the bearish traders. But it's just a bearish season, harvest time. Stock was going up for 2003, S&P 2003 to 2008. Beautiful 6 years of bullish market. Price going down 2008 to 2009. People blaming all sort of people. Shame on them. All right, you can quote me on that. Anyway, okay, so as the market was going down, all right, Federal Reserve came out and said, we're going to start printing the dollar. Okay, they start printing the dollar. So what I meant, but let's go back to our chart. Okay, now bring back my stock, the stock that we were looking at, GSPE. You were here, so watch what I say. The third truth about the area wave correction: always watch the central bank policy. So you are in a corrective phase. Pay attention to what the Federal Reserve, United States is the number one, all right? Whether you like the American or not, the United States Federal Reserve is the number one. Watch what they are saying during the corrective phase. If there is a change of policy, that will give us a bit of idea what to expect, whether that correction is already coming to the end, whether the smart money will start buying or selling. So this is what I mean by watch the central bank policy. The central bank in Japan, Bank of England in United Kingdom, okay, and so on. All the central bank, okay, but most importantly, the U.S. Federal Reserve, okay. The fourth truth about the area wave corrective phase, all right, that during the corrective phase, it is the best time to combine the fundamental analysis with the technical analysis. Have I said that? Yes. Oh, George, we are technical traders. We are area wave traders. We don't care about the fundamental. Why are you talking about fundamental analysis? All right. All right. Yes, it is time during the corrective phase to combine the technical analysis and the technical. Okay, very important because it's a time when the smart money will go around checking the book value, performing Google Assistant, checking economy news, checking the management, checking whether they are making money or not, what's the future for that financial instrument. All right, so if you are analyzing this stock, DSP Enterprise Incorporation, an American stock that belongs to the industrial sector, industrial distribution, all right, you want to check the news relating to this stock, what's the managers applying, are they good management with a high reputation, or is there a change of management? So old management was useless. So new management with a high reputation is taking over. Ooh, that's a good sign that they will turn things around a bit. Right? So we want to combine the fundamental analysis with the technical analysis during the corrective phase. That's the best approach. So the fifth truth about the area wave correction or the area wave corrective phase relating to the area wave cycle, all right, is that one must use, or in fact one can use, one can use the second area wave or the multi-wave to have a bit of idea how the corrective phase will be. I just say something very important. Remember this, if you are an area wave trader, you need to understand this and use it, all right? We use the structure of the first wave, to focus the motive wave, but we use the structure of the second wave to focus the corrective phase. So what I'm saying in here, use the second Elliott wave to have a bit of idea how the corrective wave will be formed. Is that you want to, during the corrective phase, if you can see the internal wave of the second Elliott wave, you want to check it out. Talking about Fibonacci ratio, or the fractal nature of the second Elliott wave, how the Elliott wave has been formed, how long it takes for the second wave to be formed, was it shallow, was it deep. All those information about the second Elliott wave will give us a bit of idea what to expect during the corrective phase. There is a warning, by the way, like I say to traders, about how to avoid using the Elliott wave like a science, though we use the second Elliott wave to have a bit of idea about what is likely to take place in the corrective phase. Sometimes you may see a complete divergence between the second Elliott wave and the real corrective wave, which means you may see the internal wave of the real second wave, but the correction will have nothing in common with that second Elliott wave. So the point I'm making here is that we will only use the structure of the second Elliott wave, the shape, the form, alright, the proportion of the second Elliott wave to have a bit of idea about how the corrective wave will be formed. But that is only an expectation. This correction may be completely different from the second Elliott wave, but sometimes you will feel like God, as I said to trader before, when the corrective wave will duplicate the structure of the second Elliott wave. So those are the 5 truths about the Elliott wave correction, talking about the corrective phase after the trending phase of an Elliott wave cycle. Alright, so this is the end of this tutorial. If you have any question or suggestion, alright, put in the comment section. Say, John, you said this, and I want to know this. So so that will refresh my memory about what I've said. Alright, so the stock we are analyzing is DSPE. You can also remind me about that, and also the title of that video, and then what I said. It would be nice if you say, at the 20 minutes of that video, you were saying this, and then I can quickly go there and check it out. Alright, especially if you are asking a question in the past, alright, that will help me to quickly check it out and answer your question. Alright, so if you have any question or suggestion, put in the comment section, and of course I will be busy recording another video to answer your specific question, or in another video I may be highlighting, okay, talking about, okay, answering your question. Alright, to summarize this video about the 5 truths about the Elliott wave correction, is that there are 3 popular corrective phase, corrective pattern, corrective wave. During the corrective phase, after a trending phase of the Elliott wave cycle, we may see a flat correction, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, or a zigzag pattern, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, or a zigzag pattern, a sharp correction forming the A part of the zigzag pattern, 1, 2, 3, and then 1, 2, 3, 4, 5. Or the corrective phase may be just a flat correction. Apart from those popular corrective phase, corrective wave, corrective pattern, one may sometimes see a combination of those, okay, Elliott wave, corrective waves. The second truth one should know about the Elliott wave corrective phase is that one should never assume that that correction is finished until it's finished. A flat correction may be in place, but that flat correction may turn around and become a zigzag pattern, or one may see, okay, a zigzag pattern thinking that the correction is finished, but that correction may become a complex correction. You may have a double tree or triple tree. So never assume that the correction is finished until it's finished. Use a top-down trading method, alright, and control the risk, and be very defensive if you are trying to catch the new cycle. The third truth about the Elliott wave correction is that one should always pay attention to the central bank, especially the U.S. Federal Reserve. If we are in a corrective phase, if there is a change of policy, that will determine what the biggest market participant will be doing in the financial market. The fourth truth about the area wave correction is that it is the best time to combine the fundamental analysis and the technical analysis. Alright? And the last truth one should know about the area wave correction is that one can use the structure of this real second area wave of the multi-wave to have a bit of idea what is likely to take place during the real corrective phase. But remember that sometimes the structure of the second area wave may be completely different from what is taking place in the corrective phase. But the structure of the second area wave is just giving us a bit of idea what is likely to take place during the corrective phase, but does not mean that this is exactly what is likely to take place. But there is a high chance that sometime the corrective phase will duplicate exactly what has happened during the second area wave. This is the end of the tutorial about the 5 truths about the area wave correction. We are the TSTW24 traders talking about 5 truths about the area wave correction. Happy trading to you all and speak to you soon. If you like this video, it's time to give us the thumbs up. Or if you think it's an amazing video, it's time to share it, alright, with your friend. Alright, and if you think that this is another blah 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 in a difficult accent that you cannot understand, well, give us the thumbs down. We want to know whether trader like or dislike this video, and this will put me under pressure to improve my blah blah blah. Happy trading to you all and speak to you soon.